SpaceX is going public. Rockets, satellites, AI, Elon Musk. On paper, it looks like a once-in-a-lifetime opportunity. But Benjamin Graham would call this something very different. A familiar trap for ordinary investors. I love SpaceX, but loving a company and buying its IPO are two completely different decisions. So, is the SpaceX IPO intelligent investing or a mistake dressed as opportunity? The answer comes from The Intelligent Investor, the best investing book ever written according to Warren Buffett himself. Graham's framework has 4 parts, and the last one is the one most investors miss. The first thing Graham noticed about IPOs is not the company, it is the selling. Elon Musk is one of the greatest story sellers alive. Mars colonies, making humanity multiplanetary, saving civilization. He doesn't sell you a stock, he sells you a mission. Missions target your emotions and make it harder to think clearly about the numbers. That is exactly what makes it dangerous. The more emotionally compelling the story, the harder it is to read the numbers clearly. And then, the Wall Street machine joins in. Investment banks, financial media, analysts, all amplifying a narrative that was already impossible to resist. Investment banks earn roughly twice as much selling new shares as old ones. They have an incentive to sell you the IPO. And as Charlie Munger put it, show me the incentive and I'll show you the outcome. Graham's rule is simple. The harder something is sold, the more carefully it should be questioned. And SpaceX, backed by the world's most compelling storyteller, will be one of the hardest sells in history. And that brings us to the first rule of value investing. Never lose money. Rule number 2. Never forget rule number 1. At an IPO, you are not investing, you are speculating. You don't choose the price, you don't choose the timing, and you don't see the full picture. You just arrive and pay whatever excitement demands. Second warning. New issues are almost always launched in favorable market conditions. But favorable for whom? Not you, for the seller. SpaceX survived near bankruptcy in 2008. It weathered years of failed launches, government skepticism, and existential risk. Early investors held through all of it. Now, with markets at all-time highs, AI enthusiasm at peak levels, and liquidity flooding into Bitcoin, meme stocks, and AI startups, now they choose to sell. Not when the company needed the money, when the market will pay the most for it. And an entire generation of investors has never lived through a prolonged bear market. They have only ever known markets that go up. This is when sellers maximize price, when demand is strongest. Graham's conclusion is blunt. When insiders choose to sell, it is almost never the best time for outsiders to buy. Their third warning is where cycles become visible. Graham observed that bull markets peak when speculative companies are valued above stable, profitable giants. Look at today's numbers. Coca-Cola, 100 years of profits, one of the most stable cash flow businesses in history. Market cap, $325 billion. OpenAI, projected losses of $14 billion in 2026. No historical profitability. No expected to turn a profit until 2029. Yet chasing a valuation of possibly $1 trillion in its upcoming IPO. And now SpaceX, IPO valuation $1.75 trillion. That is 5 times Coca-Cola. SpaceX, OpenAI, Anthropic. A wave of mega IPOs is coming this summer. This is not a coincidence, and that wave is itself a signal. Graham observed that IPO frenzies don't happen randomly. They happen at the top, when markets are euphoric, when investors have stopped asking hard questions, when the crowd is willing to pay any price for a piece of the future. The last time this many high-profile companies rushed to go public at once was in 1999. We know how that ended. Leading valuation expert Ashwath Damodaran in his latest post, put SpaceX's fair value at about $1.2 trillion. The IPO price is at $1.75 trillion. That is a 30% premium. But an intelligent investor wouldn't buy a stock at a 30% premium. He would want a discount to provide him a margin of safety. This means, are you paying a price that still works if things don't go perfectly? Here is what Graham actually believed. Even the best companies are often the worst investments at the wrong price, because price matters more than story. SpaceX won't be leaving money on the table at its IPO. No company does. The price will reflect strong demand and strong expectations. The real opportunity does not come at IPO. It comes after the narrative breaks, after one rocket failure, after a missed earnings quarter, after the first time the headlines turn. SpaceX is not immune to setbacks. No company is. One real disappointment, and the stock, priced for perfection, resets to reality. That is the opportunity. Damodaran agrees. SpaceX could become attractive after a meaningful correction, not because the company changes, but because the price does. Great businesses are not rare. Great prices are. But here is what this video is not saying. This is not a claim that SpaceX will fail, or even that the stock will go down. What this video is saying is this. At $1.75 trillion, the price already assumes everything goes right. But what if it doesn't? That is what margin of safety is for. At an IPO, the upside is limited and the downside is real. We want the opposite. Limited downside, meaningful upside. And the only way to get there is to buy below fair value. Elon Musk will never sell his business below what it is worth. Graham studied decades of IPO returns and put a number on it. For every dollar you make in this way, you will be lucky if you end up losing only $2. Not because the companies are bad businesses, because you are always the last one through the door, buying at the price insiders choose, at the moment they choose to sell. So what will Graham do? He will not touch the IPO. He will wait for the company to publish its first real financials as a public business. Then he will value the business without the story. And then he will wait further, not months, years, until the excitement faded, the price corrected, and the market offered him a number grounded in reality, with a margin of safety built in. And if the business turned out to be healthy, genuinely growing, with a real competitive mode that competitors couldn't cross, then the wait will have been worth it. Not just safe, profitable, because you will be buying a great business at a price that actually made sense. Only then will he buy, discipline at every step. Warren Buffett, Benjamin Graham's most famous student, is not buying the SpaceX IPO. He has spent a lifetime avoiding exactly this kind of situation. So before you buy the SpaceX IPO, ask yourself, what do you know that he doesn't? If this video helped, share it with someone considering the SpaceX IPO. Not to tell them what to do, but to show them how to think. This entire framework comes from Chapter 6 of The Intelligent Investor, where Graham maps out the exact minds most investors step on. New issues are one of them. If you want to understand the full framework behind what I just showed you, that video is next. Click here to watch it.